What's going on, guys? In this video, we're going to be talking about GameStop. I know you guys know what GameStop and AMC is, but we're going to dive in and see if this is the right stock for you to finally invest in. After the hype is over, is this the time? All right. With that said, before I do go ahead and get into the details, like, subscribe, comment down below what stock you want me to do next, and we'll dive right in. So some of you must be thinking, why do you have AMC up if you're going to be talking about GME? I just want to show you guys, this right here is where all the hype happened and everybody started to short squeeze the stock. Okay. Now, if you guys recall, all of this really started with GME and how they had some assets and, you know, they were more fundamentally sound. Okay. AMC came along and it really got pumped up. All right. You can see it pumped all the way up from down here of around 10 bucks. It shot up all the way up to around 400, and now it's back down to $9. Okay, now let's go ahead. I've done a series on AMC as well, so go ahead and take a look at the numbers on AMC, and then let's take a look at GME here. Okay, so GME, this is down here, is when everything started at around $1, right? Shot up all the way up to 120, and now it's consolidating around, you know, 13, 14. So considering where it was and where it is today, it's doing a lot better than AMC. So I just wanted to kind of dive in and see the numbers for myself. I haven't done this yet, but it's interesting to see how this has still maintained a decent portion of the move versus AMC, which is just plummeted all the way back down to, you know, the core of the earth. Okay. So with that said, I have my handy dandy Excel sheet right here, and I have obviously Yahoo Finance, but most importantly, I have MarketSmith that's going to allow us to figure out all the nitty-gritty information that we want to see if this is going to be something that you guys could invest in the long term if you so choose so. Okay, so with that said, let's go ahead and pop this Excel sheet up and type in GME. All right, let's let this thing do its calculation. Here we go. All right, so EPS is popped up. PE is not coming because obviously the negative EPS. And let's look at return on equity, which is also going to be a negative, or NA actually, because the PE is 0. So let's go ahead and plug those three. So right away, you're not getting a good start. Okay, so next thing we're going to look at is total debt. All right, to do that, obviously, we're going to pull out Yahoo Finance. We're going to come down to financials. We're going to look at balance sheet, and we're going to look at total debt. All right, so it's total liabilities. 1.7, let's plug that in. All right, and total assets we got right here. We're going to plug that in. So this figure is actually good. You see 1.74. All right, so it can pay off its debt about 1.7 times, or almost close to 2 times. So let's go ahead and look at current debt. So to do that, we're going to look at current liabilities. We're going to plug that in here, and we're going to look at current assets, which is up here. And we're going to plug that in as well. Perfect. A solid 1.74 again. Now let's look at operating income. To do that, we're going to come to income statement. We're going to look at operating income. So a negative number here, which is not ideal. And then you got total revenue, which we're going to come up and see 5.8. So almost positive here. It almost actually balances out. A -2, which is not bad. Now, while I'm here, let's go ahead and compare it to what AMC was. All right, so you can see AMC right here. I'm going to copy this and I'm going to plug it down here just so we have some numbers to compare. So you can see right off the bat, the total debt to asset didn't match on AMC. The current debt was barely enough, and the balance sheet was -7. Okay, so let's go ahead and continue going through this and see if cash is increasing or decreasing. We're going to go to cash flow, and let's take a look. You got -493.63, -496, 52, and 259. So this is right down the line here. I'm going to put it increasing here because the last 2 quarters it has increased from 52 to 259. Management owned, we're going to get that number right here on MarketSmith. Management owns 12%. You can take a look right here, 12%. So pretty aggressive ownership here. We're going to plug that in as well. And then, are the funds increasing or decreasing? So we're going to come over here and take a look at fund ownership. All right, so fund ownership, you have 37, 35, 35, 33, 35, 35, 35, 34, slightly decreasing. So even if we had this as an increase, it would still fail simply because the majority of it is on the red side. So let's go ahead and plug this back in down with AMC here. I want to see the numbers just in comparison to each other. Okay, so the EPS on GME is almost turning positive. The total debt to total asset ratio is positive in comparison to AMC. You have the current debt to assets in better shape, and you have the cash flow is increasing rather than decreasing with AMC. Okay, management owns 12% of GME, where AMC was only 1%, and the funds were decreasing in both. Okay, so not to say that this is something to invest in. I just wanted to kind of do a side-by-side comparison so you guys can really understand and see the charts and how AMC gave it all back and GME was still holding up. Is this something that I'm going to invest in? Obviously not, but I just wanted to see the numbers and show you guys the numbers as well. Hopefully, if anything, this was a little bit of entertainment for you guys and you guys did find value in it and found a way to really do this type of research on a stock that you guys are interested in. If you guys have a stock that you specifically want me to do, let me know. Earnings season is around the corner, so we'll have some updated earnings to go through. Tesla, Netflix, Google, Amazon, all these names have already reported. So maybe down the line, we'll update the ones we've done and see how they're doing. Again, thank you guys so much for watching. Go ahead, like, subscribe, and comment down below. As always, I appreciate every single one of you guys, and I'll catch you on the next one.